Good morning, welcome to this update on Wednesday the 13th of July, brought to you by Phoenix Blue. I'm Tom Colley and I'll talk to you about the markets this morning. We have an interesting start to the week. We've got a clear risk-on environment now, having been through a period post-Brexit where there was a disconnect between equities and safe havens. Equities were very bullish following the Brexit vote and a significant fall on the result, but a recovery after that. But what we weren't seeing was the opposite happening to safe havens. They were still holding around the same sort of levels, so we weren't seeing the flow of cash from one market to another. As of this week, for various reasons that we'll talk about in a moment, we've seen the risk-on environment return, and we're seeing a pullback in the safe havens and record highs on the S&P 500, for instance, and other new highs on many of the other worldwide equities markets. Before we do anything, though, we'll start with the news. Yesterday, the only real significant event was Mark Carney, the Governor of the Bank of England, was speaking in front of Parliament. Other than the political side of this, I think all it did was increase expectation of a rate rise when the Bank of England announces its rate statement tomorrow. If not, potentially quantitative easing in lieu of that rate reduction. Sorry, did I say rate rise? Rate reduction. We're currently at 0.5%. There's anticipation that we'll be reducing that to a record 0.25%, having been at 0.5% for something over 8 years. Okay, well, today we're waiting for trade balance figures out of China. As we're actually doing that, I'll just check and see if that's been updated or come in since I did that. Yes, they have, and they've just come in 311 billion versus a forecast of 320. So that's trade balance coming in below expectation, so that's a negative on that side there. Today we have the rate statement from the Bank of Canada. Don't think we'll see anything here. There has been talk of a reduction from their 0.5% rate, but they've had several events recently which mean that there's some uncertainty about that. They had the oil field fires and all the damage that was caused there. They're also have seen over recent months a really strong increase in the price of oil. So all those factors probably suggest that they're going to wait and see. The economy there isn't great, but there are some outside factors that I think they'll be looking to see settle. If you're obviously want to be aware of this if you're trading the Canadian dollar or if you're trading oil today. Also on oil at 3.30, we've got the crude oil inventories from the US, and then 4.15, the Bank of Canada press conference. So in all honesty, this afternoon, I would suggest that oil is not something you want to be trading. We've got tomorrow early in the morning, we've got the Aussie unemployment and employment numbers coming out. So there'll be something to look at when you wake up in the morning. Okay, over to Asia. Well, we're talking about bullish stock exchanges, and here's one of them. The Shanghai Composite has been bullish again since the 25th of June, which is the day after the Brexit vote was announced. We're clearly above a level here. This is significant. We're above a trend line, and we're approaching highs for this year. Over on the US dollar yuan exchange rate, we've been talking about this level here of the daily closes and devaluation of the yuan relative to the dollar. Well, we've seen a slight pullback on this. This is because we've seen bullish moves in the market. We're seeing potential quantitative easing rate rises coming out of the UK and Japan, which we'll talk about now. Big bullish move we've had this week, a risk-on move in the Nikkei. The reason for this is over the weekend, the party of the Japanese Prime Minister Abe won a significant vote, which could be perceived as a vote of confidence. And one of the major things that he'd promised to do on the back of that is a great deal more stimulus for the economy to try and generate inflation in the Japanese economy, which there's been a lack of for the better part of 20 years. So we're going to see some more extreme measures coming from Japan in the form of quantitative easing. He was actually yesterday in a meeting with Ben Bernanke, who was the previous chairman of the Fed and was responsible for their 3 phases of quantitative easing following the 2008 crash. So be interesting to see what comes out of that. We were yesterday trading the Nikkei intraday. The move was so strong it wasn't pulling back, so we were aggressively trading that market intraday. We're doing exactly the same here on the yen, where for exactly the same reasons we're seeing a weakening of the yen relative to the US dollar. This is a risk-off scenario in that money is leaving the Japanese yen as a safe haven, but we're seeing it entering the risk market, which is the Nikkei 225. The only slightly confusing thing here to newer traders is this is obviously an inverse currency pair because it's traded US dollar, Japanese yen, and that's why we think both charts move in the same way. But what we're actually seeing is this is a strengthening of the dollar relative to the Japanese yen, so a weakening yen and a strengthening Japanese stock exchange. For once, the US dollar isn't playing a big part in the markets at the moment. Over the last week or so, it's been largely ranging. I don't think we're going to see it coming into play before it breaks out of above the $97 level, when we'll obviously see a lot more dollar strength orientated moves in the market. On the downside, we've got a level here at about 93.50. The reverse of that would be true if it was to come to the downside. This is the Canadian dollar. We've got the Bank of Canada statement today. If we were to see a reduction in interest rates, we would see a devaluation in the Canadian dollar. So we'd see a break of this 1.30 level here to the upside. Again, this is an inverse currency. So Canadian weakness or Canadian dollar weakness is a move up. Canadian dollar strength is a move down. So we'll be watching that. Related to that, as always, is oil. Yesterday, we had a losing trade here. We had an order in at $46, lovely level, but it didn't look like it was going to trigger, and then all of a sudden we got a spike, and then following the spike we were stopped out. We subsequently found out the spike was caused by a report from OPEC, which is a group that's is sort of controls 40% of the oil producing countries, or countries that produce 40% of the world's oil. Their prediction was a lot stronger demand in the short and even stronger demand in the medium term going through into 2017. So we saw a bullish move in that market, contrary to what we were expecting. But as always, we always tell you where we take a losing trade. Another market that we're actually trading at the moment, we're short the New Zealand dollar at this level here. We took it as a price action trade. Our stop is above there, so it was a cautious entry, but we are seeing a downside move in this. We'll have profits off the table, stop at break even, and looking to further downside with a potential target of 722 around there. S&P 500, but there it is. We saw a record high close yesterday. The day before, we'd seen a record high, but a close at the previous high. But that's clearly a very bullish move. That is coming off the back of quantitative easing, or potential quantitative easing from both Japan and the UK. So the potentially is more money coming into the markets that can be invested in equities. On the counter side to that, here we've got gold, having been hovering around for most of the week, this level here, and since the Brexit vote, which was this really bullish move here, it has been somewhat ranging and not reacting to stock markets that had been in what we would normally call a risk-on environment. We couldn't call that because we weren't seeing the monies coming out of the safe havens being gold or yen. Okay, so risk on's what we're looking to be trading today. We'll potentially be looking for intraday trades to aggressively trade if we get the type of moves we've had over the last couple of days. Okay, so if you're interested in the way we trade, we have next week we have a upcoming event on the 19th of July in London. It's 4 hours of free trading with one of our senior traders with a question and answer section. If you're interested in this, go to the website and leave us a message, or simply email us at info@PhoenixBlue. If you've got any questions about this video, I'm on tom@phoenixblue.co.uk. In the meantime, have a good trading day, and we'll speak to you in the morning. Take care.